Hello, everyone, and thank you for joining us this morning. My name is Hunter Rayleigh. I am the Colorado Director with Small Business Majority. We really appreciate you taking time this morning to join us on this webinar. We have with us one of the lenders here in the Denver area and a representative from one of our state agencies to help you navigate the lending process and understand what resources are out there that may be available to you as we respond to this crisis. So with that, we'll dive right in. Couple housekeeping notes. First of all, this webinar is being recorded. So if there's issues with audio or anything like that, you will be able to view this at a later time. Also, if you'll look to the right where there's the toolbar, you'll see that there's a question and sorry, I'm getting a connectivity test. So on the right, you will be able to see a toolbar where you can enter your questions, see polls, and then see a list of the folks who are also joining us. Because this presentation will be a moderated discussion on your lending and business resource needs, we ask that you write the questions in there. And then one of us, as we move into the Q&A section, will be able to answer those. So with that, we'll dive right in with the introductions. So first, a bit about Small Business Majority, or excuse me, our partners. So we're happy to be presenting this with the Colorado LGBTQ Chamber. The Colorado LGBTQ Chamber of Commerce promotes professional development, business diversity, and personal enrichment. They work to advance LGBTQ and LGBTQ supportive business through shared knowledge, leadership, and support. Lastly, they connect businesses throughout the state because business is built on relationships. Additionally, we're also happy to present this with the Latino Chamber of Commerce of Pueblo. The Latino Chamber of Commerce of Pueblo is a dynamic business organization committed to promoting opportunity, growth, and progress of small businesses in a highly diverse society with emphasis on the Latino community. And if you're interested in those chambers at all, you'll be able to click on those links when we send out this deck later on today. So quickly about Small Business Majority, we are a small business education and advocacy organization. We are national with 6 offices in DC, California, Colorado, Illinois, Maryland, and Virginia. Our focus is on the top issues of importance to small business. So self-employed included in that, including access to capital, healthcare, retirement, entrepreneurship, taxes, and more. Additionally, we have an online resource hub at venturize.org that can help you navigate some of those resources. And additionally, with COVID, we have some key questions you'll want to consider as you're pursuing debt financing or potentially the forgiveness piece. And it's also a good way to just connect to other resources in the area that may be able to provide additional technical assistance. With that, I will kick it over to our friends at Good Business Colorado.
Thanks, Hunter, and thanks everyone for taking some time out of your Monday to join us today. My name is Jordan Przinski, and I serve as the Director of Membership with Good Business Colorado. Good Business Colorado is a statewide nonpartisan business association with over 200 values-driven business owners who are all committed to building a prosperous, equitable, and sustainable Colorado. Our members know that they have a role in shaping public policy that impacts our communities and our businesses. We challenge the lines of partisanship and lead with our values. You can learn more about Good Business Colorado at goodbusinesscolorado.org. And I'll go ahead and send it over to Tyler with the bell.
I'm happy to go, but would you like to do the opposite edit first?
Yeah, let's do Rosie first.
Hi, good morning, everybody. Just want to let you know the Minority Business Office is located at the Colorado Office of Economic Development and International Trade, and we assist minority, women, and veteran-owned businesses establish a public and private network for government and private contracting. We help businesses of every industry and all types. We help finding the right certification for businesses, but also government contracting and opportunities for businesses. We have a team of 3 full-time people at the office. Myself, who I'm the director, Ulises Fernandez, who is the program manager, and Soraya Bromer, who is our program coordinator. We have 5 consultants that can help businesses go through every part of consulting that you can imagine, finance, contracting, certifications, and these 5 people have extensive experience in terms of different areas. And we're going to talk to you a little bit more about what the resources we have after we do this brief introduction. Thank you.
And I'm Tyler Jekyll. I'm the Director of Policy and Research with the Bell Policy Center. We're a policy lab and advocacy organization that works for economic mobility for all Coloradans. And we'll talk a little bit about the state efforts and a little bit about federal leave that's connected to those efforts. But just wanted to highlight here, we've created a resource, the Colorado Recovery Hub. You can see the link here. That provides information on what's going on, both the state level and the federal level, and potential other alternatives as well. So with that, I'm going to turn it over to Mike O'Donnell at the Colorado Lending Source to begin the presentation.
Thank you so much, Tyler. Hello, everyone. It's Mike O'Donnell with Colorado Lending Source, and I have a few slides here. I'm going to go through them reasonably quickly, and I already see that there are some questions that I hope I can address by sharing this information with you. By quick way of background, Colorado Lending Source is a private nonprofit. We've been around now for 30 years. We work a lot with the Small Business Administration, the SBA loan programs, also the U.S. Department of Agriculture, USDA loan programs, to really provide more democratized access to capital here in the state of Colorado. From an SBA's perspective, we actually are the most active SBA lender here in the state of Colorado, primarily using the SBA 504 loan program with about $93 million worth of projects that we helped facilitate last year, working again with a lot of businesses over our history. So our mission is to foster the economic growth of diverse small businesses. So education is just as important to us as providing access to capital, and also making sure that people have the correct information related to the programs that are out there. And that's really why I'm happy to participate this morning and talk with you about the Paycheck Protection Loan Program, which was probably one of the most significant aspects of the CARES Act, probably followed very closely by the forgiveness section, which I'll jump into quickly at the end of this. But Paycheck Protection is a very unique program the SBA has rolled out, or the Senate has rolled out and given to the SBA, which allows any small business person, any self-employed individual, anyone who's part of the gig economy, like a Lyft driver or an Uber driver, 501c3s, including churches, and other nonprofits in that 501c3 camp, and also 501c19s, veteran organizations, as well as tribal businesses can access this program. The program is only live until the end of June. So June 30, 2020, the program runs out. And what it does is it allows, actually last Friday, independent contractors and self-employed individuals could apply for the program. The Friday before, it was really open to small businesses and sole proprietors. So the program is in full force now. This is unique in the way of a loan program because you, as the applicant, tell the lender how much you can borrow or are eligible to borrow. And it's purely a function of what the Act calls your average payroll costs, your average monthly payroll costs during the period, either from March of last year to February of this year, or calendar year 2019, or if you haven't been around for all of 2019, you can just look at January and February of this year. If you're a seasonal business, you can look at the period from the middle of February through end of June of last year, or the middle of February, or start of March through the end of June last year, to look at sort of comparison periods. So we've got 4 different periods that you can actually look at to determine your average monthly payroll cost number. But if you do have employees, the easiest one is probably the calendar year 2019. These loans will be at 1% interest rate. These loans are for 2 years, 24 months, and there are no payments for the first 6 months. So it's a very, very attractive loan program, and it's something that you should access if you can. Now, for the purpose of determining your average monthly payroll, they're looking at all the sorts of things. If you're an employer, it's relatively easy. It's all your W-2 type activity. It's the payment of cash tips. It's any leave like vacation, parental, family, medical, or sick leave. If it's dismissal or separation, you've paid extra money for people who might have left the business. Same with bonuses, they are fair game. And anything you pay related to insurance premiums on group healthcare, any retirement contributions you make, and then any state or local taxes, not federal taxes, but state or local taxes. Now, this is for an employer. If you are self-employed or a sole proprietor or an independent contractor, it's really the total of what you earned as income. So again, the cap is up to $100,000, but if you have 1099s that you add together, or if you do a Schedule C, that is the base period that you then look at for the period, either last calendar year or March of last year to February of this year. Look at those 12 months, divide it by 12, come up with a number, multiply it by 2.5, and that's how much you can borrow. Now, a few exceptions to this particular program, and these might be modified a little bit with a new version of this or an updated version that might come through next or this week, actually. But irrespective, this is one thing that won't change is you can't have people on the payroll earning more than 100,000. So you have to bring everyone back to 100,000 to come up with your average number. You can't really include any federal taxes or FICA taxes you paid. And anyone who is principal place of residence outside the United States needs to be removed from your payroll calculation. So those are really the only three exceptions to the calculation that are included in the Act. And although the program is referred to as a Paycheck Protection Program, loan proceeds you can borrow can be used for things more than just payroll. So you can use them, of course, for payroll, and that's truly the intent of this program, but it can also use to help with things like payment of interest on existing mortgage obligations. It can be used to help you pay the rent if you've got a lease agreement, and also to help with utilities if all of these things have been in place prior to the 15th of February. Not much I can jump over this. There's really not much you have to do under this program to apply for it. There is no personal guarantee. There is no credit score. There is no collateral required. It's really just you demonstrating this was what your number of payroll was, your average payroll cost was for that last 12-month period or whatever, and then multiplying that by 2.5. And the process is so simple for you to go through there. From the bank's perspective, they do have to check that you were in operation on the 15th of February, and that you did have income related to either salaries or independent contractor type activities or self-employed type activities. So all of that is there. And I'm going to run quickly through the loan forgiveness section too, because this is, again, it fits hands in glove with the PPP program. Although the PPP program or the PPP loans are very inexpensive, the Act allows you to get all or most of those loans forgiven based on what you then do in the 8-week period after you receive that PP loan. And the loan forgiveness amount can't exceed obviously the amount that you've borrowed, but it can be reduced if there's a reduction in the number of employees or a reduction of greater than 25% in wages paid to employees. Again, the intent of this program is to allow you to bring people back that you might have had to let go, or keep people employed who you might have to have let go in the near future. You're allowed to use the funds, and again, I'll do the math quickly. You're borrowing 2.5 times what your monthly payroll number was. You've got 8 weeks. Anything you spend within the following 8 weeks has the potential to be forgiven. So again, this is 2 times your average monthly payroll. And so you've got the opportunity to spend things during this 8-week period related to that interest, related to rent, related to utilities. That can all be potentially forgiven under this Act if you coordinate this correctly. And as long as those final 3 items on this page don't add up to more than 25%. So again, they want the majority of the funds that you spend at least to be forgiven, have to be spent on payroll, but you do have the opportunity of using these funds for more than just payroll. I know we're getting like a billion questions we'll get to at the end here. This is just a very crude indication of how you can calculate the loan forgiveness. And the Act is quite specific in terms of how you do it, but the reality might be that as we get closer to this first 8-week period, there might be some fine tweaking of this from the SBA's perspective. But just a simple example here, and you've got a few different periods you can look at. You can look at comparing what you do on average during the next 8 weeks, how many people, full-time equivalent employees you have in the 8 weeks following receipt of your Paycheck Protection Loan, and compare that with the average number of full-time equivalent employees you either had between the middle of February and the end of June last year, or between the start of January and the middle of February this year. So you've got a couple of periods that you can choose from, and you'll choose the one that's the most advantageous to you. And just as a way of a very, very simple example, if you have on average 10 full-time equivalent employees in the 8 weeks following receipt of the funds, and if you look at that same period last year, if you do the February to June last year and you had 12, then basically you have the potential to have 83.33% of your loan forgiven. Anything that's not forgiven carries forward. Again, you've got no payments for the first 6 months, the interest rate's 1%, but by the time you go through this forgiveness application at the end of 8 weeks, hopefully you'll be able to get most of your original loan wiped out, which means that your full loan is pretty much gone before you ever have to make a payment. The Act also provides another, and this was the first question that I saw on the screen today. The Act also states that there will be no reduction in forgiveness related to reductions in employments and wages if you can bring everyone back by June 30th, 2020. Not necessarily the same people, but the same number of full-time equivalent. And again, if you've got someone at half-time, that's 0.5. If you've got someone at a quarter time, that's 0.25. If you've got someone at 13 hours, you'll have to do the math because I'm not doing that in my head. But all of those things, you add all of those individual part-time people together to come up with what the full-time equivalent is. So you've really got two choices under this program to look at: either that 8-week period and then apply for forgiveness, or if that 8-week period predates June 30th, perhaps wait to June 30 and perhaps everything will be back open and things will be looking a lot more normal and you'll be back to the way it was. And if you weren't able to get back there in the first 8 weeks, perhaps you'll be able to get there by week 12 or wherever we end up. You'll need some documentation sort of identifying employees now or through that 8-week period versus what it was, as you would imagine. And the onus is on you to provide all of that to the lender. And then I can jump through these things, but for those of you, and that's really my section on forgiveness, I know there'll be questions. The Act also allowed people that had existing SBA loans to have the federal government make loan payments on your behalf for the next 6 months. And that started in April. For those of you who had SBA 504 loans, 7A loans, SBA Community Advantage loans, or microloans, if the lender that you worked with took your payment on April 1st, they are required to give that back to you or give you the choice of whether you want that applied for a later payment. But the Fed's paying your loan payments for the next 6 months if you have an SBA loan. I want you also to know that a lot of people are getting these EIDLs, economic injury disaster loans. The CARES Act also allowed people to receive up to a $10,000 grant, and it's slightly being reinterpreted as this sort of rolls out, but the funds are available even if you do not get your EIDL loan approved. And then there were some other changes that the CARES Act provided to the EIDL loans. And just to provide some comparison, again, the disaster loans, which is what I call them, a relatively low interest rate, 3.75% for small businesses, 2.75% for nonprofits. The loans go up to $2 million. The maximum under the Paycheck Protection Program is $10 million. The disaster loans can be up to 30 years. Disaster loans are provided directly from the federal government, and the SBA is a conduit for those FEMA funds. The SBA or the person processing your request will determine how much you are eligible to borrow and what term you will get. So that's really a little bit of a given at the back end, and you don't necessarily know that. But what the CARES Act did do is that it did change some of the requirements for smaller disaster loans. So if you're looking for a loan of less than $200,000, you're not required to have been at least a year old, which is what the disaster program required. And it's not strictly credit scored the same way that the larger disaster loans are being credit scored. So, and there's no requirement for personal guarantee if the loan's under $200,000. So I wanted to mention all of that quickly, and I know that will generate lots and lots of questions, but that's just for you to know about. And I just want to encourage you to watch out for scams and frauds because there's a lot of them out there. Please be reluctant to pay someone money to help you get any of these loans. The Small Business Development Centers here in Colorado are doing a great job helping people with disaster loans and helping you get through that process. And that's all free and confidential. You really don't need to pay a broker or someone to help you get a fund. But if you do, the SBA puts caps on how much they're allowed to charge or you're allowed to pay them. And so watch out for that. But just watch out for the scammers, because they've all come out of the woodwork in the last couple of weeks too. And with that, I'm going to move forward and go through my slides into Rosie. So over to you, Rosie.
Thank you, Mike. We really appreciate your summary. This is so important for everybody right now to be able to access information. So we have two main websites where we list all of the information for our businesses. The first one you can see there is choosecolorado.com/COVID-19. And we have a summary of what Mike just went through for the Paycheck Protection Program, the EIDL, the bridge loan, and some SBA debt relief deferment, and how you can start processing those. We also have, this is brand new, it's a great resource list of information here. This is basically for small business resources, additional to what the SBA is doing. We have a variety of grant programs. We have a variety of loan programs that are done at the municipal level, sometimes different cities, different counties throughout the entire state of Colorado. So you go in there and it's an Excel, Google document, and you will be able to see on the left, on the far left, if it's a grant, if it's a loan program, what type of information is there for your small business. We also have some of the banks in there listed for deferrals and how you can start working on your deferral for your loans right now, your current loans. So they have a lot of information there. So I will ask you to go and review it and very in detail figure out what resource you can use as a small business. This website also, choosecolorado.com, has valuable information about unemployment, student loan deferrals, eviction assistance, and some other industry-specific resources. The other website that we have is the coloradosbdc.org website. We also have additional information there for COVID-19. Please make sure that you also visit this website, because we have valuable resource webinars for small businesses on basically tutorials that can walk you through the EIDL application process, the instructions. Colorado Lending Source, Mike has there some information as well. So let us know how we can help you. We have with us too this morning a couple of our consultants that are excellent resource for you. We have Mark Gides, whose email address is mark@mbocolorado.com, and Talia Bond. She's also one of our senior consultants. It's her email is talia@mbocolorado.com. These two individuals can help you walk you through basically any application that you may have decided to do with the SBA. They can help you figure out what is the documentation that you have to prepare for these loans, and they can just basically guide you through the process. They have done it themselves for their own business, and they have a lot of information. So the last resource that I wanted to talk to you about, and this is extremely important, is the COVID Small Business Navigator Hotline. The Small Business Development Center has developed this assistance very, very quickly from the very beginning when we started COVID-19. And we have a hotline, 303-860-5881. You can also send us an email at oedit_S as in Sam, B as in boy, navigator @state.co.us. This is an excellent resource for small businesses because you can talk to a live person, you can get additional help for assistance, and this is not just for COVID-19. In case you are needing some assistance in terms of marketing, we can send you to different resources in the SBDC network. We have 15 offices throughout the state for the small business development centers, and we have a variety of consultants that can walk with you through the processes that you need for your business right now. We also have multiple languages. We have Spanish-speaking consultants available for you, and we have one Somali-speaking consultant as well that can help you and direct you to some of the resources. I hope this is useful, and please give us a call, 303-860-5881. We have live people that can listen to you. You can ask your questions, you can go through anything that you need for your business. Thank you.
So this is Tyler Jekyll again with the Bell Policy Center, and I just sent hopefully a link. Even before I want to get started, I wanted to just provide more information. There's an upcoming virtual question and answer session with the Colorado Department of Labor that many of the organizations on this call are helping to sponsor. That's this Thursday from 12:30 p.m. to 1:30 p.m. And this would be a really great time to dive into more detail over a lot of the topics that I'm just going to roughly cover here, but just wanted to make sure people had information to that larger session that is occurring, a more detailed session, hopefully this Thursday. So I want to cover two main areas. One is kind of paid sick and family leave that's related to COVID-19, and then the other is really unemployment insurance and other programs that the Colorado Department of Labor has opened up for this. So on the first side, I really wanted to highlight two big areas. One is at the federal level and the other at the state level. At the federal level, right before the CARES Act, the federal government had passed legislation to require 12 weeks of job-protected paid family medical leave. And this applies to businesses below 500 employees, and then does exempt and allow for exemptions for businesses where this would present a hardship. But it also provided for refundable tax credits that could be provided for businesses that actually provide the leave to their employees. The second is at the state level, which early on through the Colorado Health Emergency Leave with Pay rules had mandated kind of sick leave for employees in particular industries. And so this is 4 days of sick leave, that's full pay, but it only applies to these particular categories that you can see on screen, which is leisure and hospitality, food services, retail establishments that sell groceries, childcare, education, and certain healthcare positions. And so this, you can go to the CDLE website to get more information about kind of what those actual categories mean. They have kind of a bigger kind of Q&A document that walks through kind of what businesses fall into those different categories. The second area is unemployment insurance. And so what the Colorado Department of Labor has really focused on is really making sure as much as they can that former employees are getting benefits as quickly as possible. So they have eliminated requirements that formerly required a waiting period before you could actually get benefits. They've tried to speed it up that the people are getting benefits within 10 days. And then they have really tried to help businesses by making sure that the benefits are not charged to employer experience ratings. So future premiums do not go up if kind of unemployment is related to COVID-related reasons. The other area that I just want to highlight before diving into what's happened at the federal level is the program that's called WorkShare. This was an existing program in Colorado that's been really beefed up through federal resources, but this is intended to provide an alternative to laying off employees. And so if a business is reducing the hours of an employee between 10% and 40%, they can apply to have unemployment benefits really pick up the lost hours or the lost pay in between. So employees can receive what they might have received in unemployment insurance for that lost hour. So please be sure to click on these links as they become live through the slides to get more information on the WorkShare program, but it's a good alternative to having to lay off or furlough workers. So I just wanted to highlight what's happened through the CARES Act under the larger kind of unemployment insurance programs. And it's really done three things. So you can see there's different programs here, but I really want to highlight the main factors. It's really changed kind of who is eligible for unemployment insurance, how long they're eligible for unemployment insurance, and then the amount of unemployment insurance. So on the WHO side, this program called the Pandemic Unemployment Assistance Program, which is just really kind of a distinction of the larger bill, is to cover many individuals that may not be covered before. So this is individuals that are self-employed, independent contractors, or people who are seeking work that have not found it yet. So those are really expanding who's typically eligible for unemployment insurance. On the how long side, this is really extended even our extended unemployment benefits, which under current law in the state of Colorado is 26 weeks, by another 13 more weeks. And this is all federally funded so that former employees could get up to about 39 weeks of unemployment insurance under this new program. And then the last is the amount. And so the pandemic unemployment compensation provides for an additional $600 per week in compensation through July 31st. And this is really equal to the average amount of worker benefits in order to get people up to 100% wage replacement. These programs are really starting to go live. So the Department of Labor and Employment has been really kind of working to get guidance from the federal level, and for especially people under the expanded parts, as well as getting these additional dollars out, are coming in particularly this week and next week. So the question and answer period this Thursday would be really important. So as with always, please be sure to go to the agency website. They really beef that up when it comes to particular information. It's provided below here at that last area, but also please join us Thursday to hear more and ask specific questions for the agency itself. So with that, Hunter, I guess I'll move to you to open up to questions or to dive deeper into small business majority resources as well.
Sure. Thank you, everybody. So real quick, just to, again, we have a lot of the questions that are being asked, or just in terms of how to approach a loan and some things to be thinking about, in addition to some potential technical assistance options, can be located at venturize.org. Additionally, we have regular updates and COVID resources as well at Small Business Majority. One thing I do want to flag before we jump into some of the Q&A is that if you're currently going through this process, right now, one of the ways that we're really one of the only options for helping improve these programs is going to be reporters writing stories about that. So if you're interested or you want to talk and share your story, please reach out to either myself, Karen, or my colleague Lindsay, and our information will be on the next slide. But with that, I want to jump into the Q&A. I think we're seeing a lot of really good questions here. And I think just to start off at a high level, so Mike, I think one of the interesting things about these programs is that forgiveness piece with the PPP loans. I think just as sort of some of the questions we're seeing here is, does the 8-week timeline on those loans begin immediately when the funds are distributed? And then as it relates to the forgiveness piece, so let's say it is 8 weeks, that's going to end before June 30. So how do business owners approach that discrepancy when their loan funds may run out before June 30, and how does that relate to the forgiveness piece?
Yeah, good questions. And yes, it does. So the way the Act's written, then the 8 weeks immediately after you receive the funds are the critical period. And that's when any funds you spend during that 8-week period have the potential to be forgiven, as long as 75% of them are on payroll and related type situations or more. And then you have actually 2 bites of the cherry. So if you can't get everyone back within that 8-week period, and it's another few weeks to get to June 30, then you can maximize your forgiveness if you do bring everyone back by June 30. But say you only bring 75% of your folk back during those 8-week period, and you get up to 100% by June 30, then you can still use the June 30 numbers to actually claim for forgiveness. So it's just like you've got a couple of different periods you can choose at the front to maximize the loan you get. You have a couple of different choices at the back to maximize your forgiveness.
Thanks so much, Mike. And hey, everyone, my name is Karen Moldovan, and I'm the Director of Policy at Good Business Colorado. Also going to be helping a little bit with the Q&A and taking a look at all the dialogue in the chat box. Another related question is we've seen a few questions pop up around businesses that have applied for the EIDL loan, and they've also applied for the PPP loan. So can you talk a little bit about restrictions or advice if a business has applied for both? What do they need to be considering? I know that there's been some talk about being able to roll over the EIDL into the PPP. I know there's been questions around tax implications. So can you talk a little bit about what businesses should think through if they have applied for both?
And that's a really good question. It's probably worth doing that. The paycheck loan, the paycheck protection loan, is going to be potentially quicker. The disaster loan, because it's being processed by the federal government, no offense to any federal government employees on here, but it just takes a lot longer to get that as opposed to a private sector lender like a bank, or even potentially a nonprofit lender like us. If we had lots of money to lend, we'd be getting out there as well. But so the paycheck protection program says, but the one thing, you can't have the 2 loans for the same purposes. So if you're borrowing funds under both program to help with payroll, you can't double dip, if that makes sense. But if you do have already an existing disaster loan, an EIDL loan in place for payroll, then the paycheck protection loan, when you get that, can be used to refinance the outstanding balance on that EIDL loan, because again, the paycheck loan is going to be less expensive, at least at 1% with a forgiveness factor, and then the EIDL loan is going to be typically at 3.75%, or it will be actually. So if that helps a little. So it's definitely worth applying. I think I haven't met very many people, to be honest, who've actually got the disaster loans. The disaster loans will also be open probably through easily next year. The paycheck protection loans will probably go away in June. So if it was me, I would be applying for the paycheck protection loan first, but also applying at the same time for the other, knowing that I'd probably get the paycheck protection loan in a week or so, and I might get the other one in a couple of months. It would be what I would be thinking.
So, and thanks for that. And I think we'll do, I have just one other question. And then I see there's a number of questions here about UI. And then I think some of the grant programs that Rosie was discussing. So on the lending side for sole proprietors, how should they be approaching this? Because I think their salary, you had mentioned that their salaries would be included in this, but how does that work if they're taking draws or working through other forms of compensation through their business? Because usually it's not so simple with self-employed individuals as simply just having a W-2.
Correct. And that's a challenge for independent contractors too, because again, 1099s are fairly common in the independent contractor world, but you may not get them from everyone that you work with. So just like a self-employed individual or a sole proprietor, the calculation of payroll from the way the Act is written is that your gross income for the year is your payroll, because you may or may not pay that to yourself, but that will typically flow through to you on your tax return to be reported as, well, again, your net income flows through in the tax return, but your gross income is basically what you would earn or what you would use as the payroll number for the paycheck loans. And just doubling on that too, there's a very common question that we get too, is that if you're an employer, can you include in your calculation of payroll the 1099 payments you make to independent contractors? And the answer is no, because independent contractors themselves are business people, and they can apply for their own loan, and they can maximize forgiveness by applying that way. And if you're looking at full-time equivalents, you cannot count people who aren't employees in that employer calculation. If I can just hit off that question, because that often comes up a lot too. So it's for a sole proprietor or a self-employed individual or an independent contractor, it's the gross amount of your income. That's your payroll up to a maximum of 100,000 that you then divide by 12 and multiply by 2.5 to come up with the number you can actually borrow under the program.
Thank you, Mike. So kind of what I see is the $1 million question. No pun intended. So for you and for Rosie, what are your recommendations for businesses that still have not been able to find a lender taking an application? Maybe they're an existing Wells Fargo client, and of course that they have not been sort of ready to go with this. Maybe they bank with a community bank that's not a 7A lender. Can you all give either share a list or tell folks where to go and how to go about getting an application in? I think there's a lot of stress because it feels like the clock is ticking, and folks really aren't sure where to go.
Yeah, and it's unfortunately a common issue. And again, this is where some of these predatory people might pop up and charge you money to find a lender. But I think OED itself, and Rosie can share with me, but I know that OEDIT was looking at a list or trying to create a list of banks or lenders who are available to make loans. And we've been sharing information with that. I know that small business development centers have been collecting lists. I know that First Bank, for example, just got overwhelmed and they've stopped accepting them last Friday. Wells Fargo has issues with the regulators and they can't lend more than they're actually at their cap now. So, there are a number of them out there. And off the top of my head, there are people like Vectra Bank, US Bank, Citywide Bank, Academy Bank, TCF Bank, First Southwest Durango. There's a bunch of people who've let us know that they're open to lend. But given that there's just a lot of interest in the program, even the banks that are available just have lots of requests to actually get through, to actually get to you. So my advice is to be just a little patient. There are two versions of an addendum to the CARES Act at the House and the Senate in DC. Both of them would add a considerable amount of money to this program. There was also an initiative from the Treasury Department last week that would allow banks to sell their loans to Treasury so that they could reseed and refund their program. So I wouldn't be concerned that we're going to run out of funds tomorrow. And I'm a little sad that it's just a process of actually getting in the queue and getting your application done. We as a nonprofit lender are technically allowed to make these loans, but we don't have the liquidity that banks do. So we're helping some of the banks get through their queues by helping them process their loans a bit faster. And perhaps there'll be more people like us that will turn up to help the banks get through their queues. And that's really just a matter of, so a long answer to your question is that just check around. Don't feel like you have to move all of your relationships to a different bank, because we don't want them to blackmail you into doing that on the promise of getting a loan and then just put you in the queue. So work with your local bank as best you can. And if they're just unable to help, which is Wells Fargo's problem today, if the regulators relent and allow them to make more loans, then they can. Or perhaps they can sell some of their loans to Treasury and then free up some more funds as well. So it's just a matter of being patient. And I don't have a great answer for you, but that would be what I would suggest, if I may.
And Karen, my answer is pretty much the same. Be patient. Try to work with your bank first. And if you find that your bank is not working through these loans, then one of the things we've heard is we have in the hotline, we have a list of banks that may be able to work with you. So one of the things we've heard, through different clients that we have is some banks that are open to work with you and process these loans, they just may require for you to have or establish a banking relationship with them. And that can be very easily done. But call the hotline first and let us help you find the best lender for you. One of the things that I want to stress out is what Mike said. Please do not just call or accept call anybody that sends you an email. There's a lot of room for fraud and for misleading information right now at the moment. Unfortunately, people take advantage of these. So just call the hotline and make sure that you get a good referral from our small business navigator.
Thank you. So changing gears a little bit, Tyler, I think one of the confusing pieces with all of this is that there are multiple loan programs. Not all the money can be used for the same thing, but likewise, how they interact with UI. And I think just at a high level, we had a question here with folks with a couple part-time gigs who have employed or applied for unemployment through one employment stream, but are they able to apply for UI for the other part-time jobs?
So as of now, I wish I had an answer to that, but the regulations have not been implemented. So I would say continue to apply for those additional streams, and as they begin to roll it out, you'll hopefully be able to get an answer to that. So I wish I had a more detailed answer for you, but they're beginning to really start to implement, especially the self-employed and independent contracting side of UI, and just there hasn't been direct guidance on it from the federal level yet.
Thanks, everyone. So before we move on to another question, I just want to make the pitch one more time, because looking in the chat box, I see absolutely understandably there's a lot of frustration with folks around, how this is all working, frustrations with the big banks, frustrations with SBA, and asking, how do we communicate this information? And as Hunter said, both Good Business Colorado and Small Business Majority, we are hearing from media and reporters really wanting small businesses to tell their story and to talk about these frustrations. And how we can use that for future advocacy efforts. As we know, there is going to be more federal action, and we really need to be able to give folks at the federal level, our lawmakers, really tangible examples of what this is like for small businesses to navigate. So just to pitch again, if you do want to talk to the media, if you feel like you're kind of going through it with this and this is just not working and the frustrations are getting really high, that's a story that we can tell. So please let us know in the chat box if you would like to be placed on a media list and possibly have a conversation about what this is looking like for your business. So to keep going through the questions, another question around the terms of the PPP loan. If you mainly have 1099 contractors, instead of traditional employees, can you hire back 1099 contractors under the PPP loan?
Well, that's it's Mike here. Essentially, you can always do, well, again, probably not, because they're not employees. They're essentially, you're paying someone who's their own business owner. So, and you don't technically hire a contract individual. They're not employees, so they don't count for any forgiveness. So from the perspective of, you can, the act is very specific. You can use the proceeds of your PP loan to actually help with payroll. Payroll does not include 1099s, and then those other three things like the rent and insurance and stuff like rent and interest and mortgage type interest, as well as utilities. So you can use those proceeds that you borrow to do those sorts of things, but a 1099 wouldn't be considered payroll as it's defined by the act.
Thank you.
So just kind of as a real quick follow-up, because I think that going back to one of the earlier questions we asked, and let me see if I can get the exact wording, because I just want to make sure that we address it. So on the employee draws, so if somebody's filing as an S Corp and just take a disbursement, is that would that person just count the disbursement as their income and then file for or apply for PPP that way?
No, from a tax perspective, again, someone who works for themselves or has their own income, they might take money out of the business, but really that's sort of ignored when you actually go to look at what the business makes from a tax perspective, unless the business is actually paying that person and you set up as a W-2 or something. But taking money out of the business or not taking money out of the business doesn't really make much difference. It's really the gross income. So if I'll use the example, if I on the weekends like to drive Ubers and I make $20,000 a year driving 2 nights a week on the weekend, that's my payroll. If you like, that's my average pay, that's my gross payroll number, that's my gross income. I might put that in my bank account. I might take $10,000 out and leave the other 10,000 there, but my income was 20,000, and so that's what I would be using as the number to divide by 12 to multiply by 2.5. So a draw is just removing money from a bank account. It doesn't really impact the. It's not really a wage or a salary, if that makes sense.
Another question, so either to Rosie or Mike. So in terms of the PPP application, I think page 1, it asks for the business to give either their TIN, EIN, or SSN. Can you provide any information about, is this an either or an or? What would you recommend for business owners who don't have a social security number?
Ooh. Well, again, the PPP loan is available to people who have residences here, or ordinary business, or the normal residences within the United States. If they don't have any sort of tax ID number or social security number, they're not necessarily precluded from applying for the loan, but you won't be able to enter them in the SBA's system because everything is predicated on some sort of number like that. So I think it would be more challenging if someone is not legally able to work here or be here for them to apply for this particular program. It doesn't mean that there aren't other programs that you could access, but it would be more challenging from a federal perspective. But Rosie, you might have something to add there.
Yeah, absolutely, Mike. Thank you for that. We just have to consider that all the loans that we are talking about here, the Paycheck Protection Program, the EIDL, some of the 504-7A, all those loans are done through a federal agency. So the recommendation is that if the person, the owner, is not a permanent resident or a citizen of this country, we can look at some of the other loans as an option for them. But in this case, my recommendation is not to go there because these are federal funds, not necessarily the best vehicle for them.
Great. So I think we have time for probably one or two more questions. And I think, so for folks, particularly with PPP, most of how you're calculating your loan amount is based on 2019 payroll. So how do folks approach this if they had recently started the business this year, or they don't have the full 2019 payroll to reference?
And the recommendation there is that if they weren't in operation for all of 2019, they're allowed to use their numbers from January and February of this year. The Act does require that they were in business on the 15th of February, and so gives you at least like a month and a bit. But if you started after the 15th of February of this year, then you unfortunately are unable to apply for a PP loan. But yeah, so you can just use the 2 months, January and February. And again, you've got the choice of doing that just to multiply or divide that number by 2, and that'll come up with your average payroll number. Multiply that by 2.5.
Thank you. I think we might have time for maybe one or two more if we talk quickly. Do other presenters have any information on the Main Street Business Lending Program?
That could be us. We Colorado Lending Source has the Colorado Main Street Loan Program. We also help the state of Colorado operate the Colorado Microloan Program. We're actually reinventing both those programs, actually, and we intend to relaunch again on Wednesday with an initial focus on rural communities, and then hopefully, as we can raise additional funds, bring it all the way across into the metro areas. But if you're asking about the Colorado Main Street Program, I'd be very happy to either get your information and share that with you offline, or as we relaunch it again on Wednesday with a different product, which is actually modeled a little bit as a cross between the PP program and the EIDL program. But again, we unfortunately don't have unlimited funds to lend, and we'll get out every dollar we can. But we're still also trying to raise additional funds to help with this program too. And some of you mentioned these new legislations that potentially could go through this week in DC, which would provide we nonprofit lenders with access to more funds to actually try and help support the banks make these PP loans. But that hasn't happened yet. Hopefully it will soon.
So
And
I think,
Karen, for
oh,
that
go ahead.
purpose as well, they can send me an email and I can put them in touch with Jeff Kraft, who is our Business Funding and Incentive Director at the OEDIT. So they can send me an email at rosie.mcdonough@state.co.us. I will be happy to forward over the questions and make sure that they get in touch with the right person at OEDIT.
Perfect.
So final question, and I think this is one that I've gotten in variety of forms, but so one of the questions here asks if they have H-2B workers and how that would calculate into your PPP assessment, and if they would be included in that. And I think more broadly too, given that we're going into the summer months, how do seasonal workers account for this as well? And I think that touches on a bit of the 1099 question as well.
Yep, and just quickly, again, as long as their normal place of residence or regular place of residence is here in the US, they can be counted in the payroll number. If they're truly independent contractors, they couldn't be counted in the payroll number and they would have to apply individually based on their Social Security number. I have peeked inside one version of the CARES Act 2.0, which was going through last week. It didn't make it. Did provide some more stringent requirements that would actually narrow down access to the funds to legal permanent residents and citizens, but we'll see what comes out, if anything, this week or the next week. But it would really be, you're right, it's a challenge. And we're seeing this I was just listening to a podcast this morning, that's a big problem in Europe where people move around a lot and you can't move around anymore. So access to workers will be a real big issue in rural communities when it comes to all of the picking and the stuff that has to be done to harvest the crops. So there are challenges ahead, and perhaps just like Europe is incenting people to move from the cities to the countries to help out there. I don't know whether that will happen here or not, but I waffle on too much. But irrespective, yes, it's an issue, and I can't give you the exact guidance there, but I think it's something that we could have our friends in DC look at, which they haven't done yet. And USDA might be a good resource for us to help with that.
Well, thank you, everybody. We're coming up on the end of our time, and I just want to emphasize with this last slide, all three of our emails are up here. So if you're interested in media, you have additional questions, please feel free to reach out to us. The other thing I want to plug real quick is next to the questions tab in your toolbox, there is a polls tab. And the polls we're asking is generally whether this has been helpful, and then also just some additional topics that may be helpful for future webinars. So please, before you jump off, just go through those very quickly. Beyond that, I think that is everything that we were going to cover today. So we'd like to thank you all for attending. Again, as a quick note, a recording of this webinar will be sent out to you. The slides will be made available to everybody. And I know there were several questions that asked if the links in the slide deck will be live. They will be in the PDF that we're sending out. And again, all of the partners on this are an excellent resource as you're going through this crisis. So we really appreciate you taking time this morning to ask some questions, and we hope to hear from you again in the near future. Thank you.
Bye, everyone.